Hello all and welcome back. I hope you're all doing really well. Thank you again for the love and support on the most recent video. I seriously appreciate it and I hope you are all enjoying the content as it were. If you aren't subscribed though, make sure you are. I know a lot of you, about 50%, aren't. Please do, as there is plenty more content coming in the future, stuff that you don't want to miss out, particularly because a lot of it is first come, first serve content, particularly with rate of return on new platforms on the Hedera ecosystem. You know, high APY rates, etc., will be available to those that are in the scene first rather than those that are not. So if you want to get a little bit of a head start on some of that when it does go live, make sure you are subscribed with the notifications turned on, as well as Twitter as well. I do publish a lot of it on Twitter. Make sure you guys get the early drop. Anyway, tons of content again to cover in today's video to do with cryptocurrency and some serious and substantial updates and news articles about Hedera as well that I wanted to cover, as well as Chainlink, which is a cryptocurrency interoperability project that I've mentioned several times before. Looking at the crypto bubbles, we can see it's a mishmash of green and red across the board. Some of the main projects as we look at here, Quant down 9.5%. It did go on a bit of a run yesterday. Actually, over the last couple of days, it's done very well. We can see it's up 34% on the week. Now, I was actually buying down here around the $60 range. It's doing a bit of a pullback, nearly down 10% on the day, and I will continue to stack my quant bags. The other interoperability chain, which I will be talking about, obviously, is Chainlink as well. Down at somewhere around, I think it's like £5. So what's that, like $6 or $7? Serious big buy opportunity for me to bring down my average on that. Fairly flat line over today and yesterday, 25% down on the month, nearly 60%, 65% down on the year. Currently trading at just over $6. And then of course, Hbar as well. And some of the projects that we talk about, XLM, Algorand, for example, we've got Near Protocol there, Ethereum. All of these are fantastic buying opportunities at the moment, which I'm taking advantage of. The top three that I've been buying over the last 4 weeks or so, though, have been Hbar, Quant, and Chainlink for transparency. They're the ones that I'm stacking massively. Whales are buying 140,000 Bitcoins every single month directly from exchanges, according to Glassnode statistics. So again, ask yourself the question, why? Why are some of the biggest whales with the largest volume of capital buying such numbers of Bitcoin on a monthly basis? Of course, it's because they clearly believe in what Bitcoin will do in the future, whether that's from a wider cryptocurrency perspective or even just making them some money over the long term with a price appreciation of that Bitcoin asset, which is of course one of the main reasons a lot of us are interested in this as well, is an opportunity to earn a return on your investment. And majority of these whales believe that that is the case. Some more breaking news as well. Manchester City Football Club, obviously one of the sort of top 5 clubs in the Prem in the UK, has just signed with Bitcoin and crypto exchange OKX as their official training kit sponsor. So this will be endorsed on the kits for their training sessions. Again, really big. This is more exposure for cryptocurrencies in general. Obviously, football in the United Kingdom and across Europe is absolutely massive. Millions, if not billions of pounds in sponsorship deals, etc. And this should help drive forward cryptocurrency adoption even further. Here's that news and some statistics on Chainlink that I wanted to cover quickly. So in Q2 of 2022, Chainlink grew to support 1,000 plus decentralized Oracle networks, powering 1,350 plus projects across 12 different blockchains and layer 2s. Key milestones being 3 billion plus data points, 185 million plus on-chain calls, and 7 million plus randomness requests. And we can see that across this infographic they put together here. 12 plus native integrations from Avalanche, Phantom, Solana, Polygon, Harmony, Ethereum, tons of different stuff. You've got the 3 billion data points delivered on chain, 1,350 plus projects in the Chainlink ecosystem, 1,000 plus total Oracle networks. Huge numbers here from Chainlink, and it's one of the reasons why it's one of my favorite interoperability solutions, along with Quant, of course. And then the Chainlink adoption update as well. This week, there were 16 integrations of 3 Chainlink services across 4 different chains: Avalanche, BSC or BNB chain, Ethereum, and Polygon. So some serious layer 1 chains there as well. 3 keepers, plus 7 VRF, and plus 6 for price feeds between the week of the 4th to the 10th of July 2022. So more numbers coming out from Chainlink as their product continues to expand, and the same goes for the likes of Quant. South Korea's largest wireless carrier as well, with 32 million plus subscribers, is building its first Web3 and crypto wallet. So South Korea keeps driving forward that cryptocurrency adoption. It's one of the pioneers in the Asia Pacific region, and they're doing great work indeed for cryptocurrencies. Great tweet here as well that 𝗧𝗜𝗡𝗏 retweeted. This is Hedera and 𝗧𝗜𝗡's market. Each day, more and more people will swap from Ethereum and Solana to Hbar. First of all, for the speed of transactions, second for ABFT security, and third for the low fees, which are of course fixed. Don't be late. Hedera right now is like Solana 2 years ago. Obviously some projects there that I featured on the channel. Of course, one of my favorites being 𝗥𝗘𝗙𝗘𝗥𝗥𝗔𝗟𝗦 Glow Club at the top. We can see Creamies there with Master Creamers. You've got the Ghost Passes, Koala Club, and plenty of other fantastic projects built on top of Hedera that are doing very well and continuing to see more and more volume as the days go on. And this is the general narrative I've been seeing for sentiment across Hedera, is that it is gaining a lot of traction and absorbing users from Solana and Ethereum, particularly to do with NFTs, because of how cost efficient it truly is and how robust the metadata infrastructure for those NFTs are. We can see this continue to expand. Some great tweets here as well from STADER. So let's just focus on a bit of a staking update across the board. Current market scenario got you down. There's still a way to generate yield and supercharge your profit once the market flips. Stake it with STADER. So obviously supercharge your returns by staking with STADER. As I've said before, still around 35 to 40% APY throughout the month of July, which is brilliant to see. Of course, that will fluctuate as the total value locked increases, and they'll be pulling some of those rewards away as we move out of July and native staking takes more focus. When you stake, you could end up with approximately a 2.5 times boost to your Hbar by 2023 to 24. Once you stake with STADER, you get the liquid token 𝗥𝗡𝗙𝗥𝗥𝗥𝗥, and thanks to 𝗥𝗡𝗥𝗥𝗥𝗥, you'll soon be able to generate more yield on DeFi platforms, transact on marketplaces, and more. So in short, you can earn juicy staking rewards and grab tasty yield opportunities, both at the same time without being locked up, because they are liquid tokens. Plenty of different videos on my channel to do with STADER. Just literally search across from how to stake, where the rewards are coming from, security, etc. Loads of videos covering it, which should help you guys out. Wanted to play this clip quickly from Lehman himself. Hedera obviously retweeted it. What is the minimum amount of Hbar I will need to participate in staking when it goes native on Hedera? What kind of lockup periods will there be as well? In both cases, long story short, 0. And obviously this is to do with the 406 HIT proposal. Let me just play this minute-long clip for you guys from him to just explain what's going on.
Lehman, is there a minimum amount of Hbar that will be needed for staking?
Sure, 0. No, the staking system is really designed to be easy. There is no minimum for how much you need to stake. There is no slashing and bonding, or bonding and slashing. There is no lockup. There are no ways you lose your Hbars. There's no ways they freeze up. You don't even have to do anything when you've staked your account and then some more Hbars come into your account. They're just automatically staked as they come into your account. And then if you want to spend them, you can spend them. And then they're just automatically less being staked after your account balance goes down. And so all you need to do is just set up your account to be staking, and then it stakes as Hbars come in. So the minimum is 0. Don't get a whole lot of rewards with 0, but the minimum is 0. This, of course, is all in HIT 406. Look at that if you want details.
As you can hear from him there, you literally don't have to do anything at all. The minimum is 0. Once you have an account set up, those native wallets will automatically begin accruing rewards and distributing rewards to the wallet once the minimum thresholds are achieved. Brilliant adoption that we're seeing there from Hedera in general across the board, and will help drive forward the DeFi aspect of the ecosystem. We're going to play another video as well, because there is a massive Saucerswap update. They're obviously still going through their second round of testing on the testnet, and we are probably days away at this point from an official launch on the main net servers. There is a yield farming tutorial online, so obviously special props again to Saucerswap and Warlock and Key for the narration on this. I'm going to play it. It's a minute or so long, and it gives great information as to how the yield farming will function on Saucerswap. Of course, the interface is so beautiful, really well put together. You know, absolutely flawless. One of the pioneering, or the pioneering, decentralized exchange on Hedera. So let me just play this for you guys.
interface, I can see that I currently have roughly 257 LP tokens staked, representing approximately 5,827 USDC and 1,156 Hbar tokens. Note that these proportions are arbitrary and do not reflect market prices. As can be seen, this translates into $151.83. The total dollar amount staked across all farms is displayed in the top left corner of the interface. Below Earned, I can view an approximation of my accrued sauce based on the current APR. This sauce will accumulate over time. I have the option of harvesting whenever I so choose, which transfers that sauce to my hash pack. It is gas efficient to minimize the frequency at which I harvest. However, I will do so now for demonstrative purposes.
Of course, he's not wrong about minimizing the number of harvests or withdrawals from a staking pool. However, many of us will know, obviously, the fixed fees on Hedera, they're incredibly low compared to other chains. So it's not something you should be particularly worried about if you do want to jump in and out of these pools at will. You will be paying a fraction of a dollar each time you do so.
Simply click on the Harvest button on the right-hand side of the interface and approve the transaction in Hashpack. I can verify that this worked by checking my sauce balance. The Harvest All button in the top right corner.
If you're in multiple pools, Warlock explains here that you have a Harvest All button to harvest and withdraw from every single pool. It queues a series of transactions in your Hashpack wallet for you to go ahead and approve, and then it's less clicking for you along the way. I believe he then just goes on to demonstrate that. But however, we can see across the board that this interface is looking absolutely fantastic. It's incredibly robust. And for the majority of the feedback I've seen over on the Discord server and from the team themselves, from their announcements, it has been a very smooth process so far with absolutely minimal bugs. And they are still continuing to roll out new features and implement updates if the community are voting on these sort of principles. So, for example, if you have a great idea that you would like to see implemented, you can submit that request. If the team do decide it is a great idea and they take it on board, you will also receive some source. So make sure you guys are engaging with their Discord community. They are a seriously open dev team and they are looking to make one of the most flawless products they possibly can. They are truly invested in the Hedera ecosystem. They're not here to get in and get out as quickly as they can. Moving across, let's talk about some NFTs again. So NFTs are taking over. Did you know that all the NFTs are built different? But how does one unleash the entire potential of these unique tokens? Hedera has shown us the way. So our one explosive use case of NFTs for the first time ever, art is being created, designed and presented to the world in code and sold on marketplaces like 𝗧𝗜𝗡𝗏𝗦, GoMint and HashAxis, making it secure, publicly verifiable and unique forever. The music industry as well, with SeaKey, Web 3.0 streaming platforms built on Hedera, also uses NFTs. We have covered SeaKey many times, very excited for their launch. We've also got Tune.fm, all those jam tokens that we'll soon be able to pick up very easily via the Hedera dexes, aims to give back control to music artists, integrating programmable NFTs into music, thereby boosting the creator's economy in the proper sense. Let's see the next one. So video games and player ownership. NFTs here offer true custodial value to gamers, freedom of utility, trading of in-game items, and total control over those in-game assets. That's what Ubisoft, one of the Hedera's governing council members, has decided to do. And we can see that with that AAA game as well, Lithos. Coupons and combating fraud. Industry is booming and will reach 30 billion in the next 10 years, but they're not secure in their current form. Having intermediaries in its process makes it vulnerable to attacks. By integrating NFTs into the process, central attack points can be reduced, and therefore we've got the Coupon Bureau, a leading coupon standard non-profit institution, uses the Hedera network and will implement the new 8.1.12 coupon standard using NFTs to provide real-time data to retailers and issuers. Don't forget that Coupon Bureau use case will be going live sometime in July. We're probably about a week or so away from that launching, and that will see the TPS begin to increase as well. Talking about use cases, 𝗟𝗏𝗡𝗏𝗦.io, they have listed MasterCard as a partner for immutable data storage. So again, this is an absolutely huge use case for Hedera, and we should start to see the transactions roll out from this, but the partnership is just as big as well. Can 𝗟𝗏𝗡𝗏𝗏𝗏 include blockchain? Yes, 𝗟𝗏𝗡𝗏𝗏𝗏𝗏 offers the possibility to use blockchain, or more generally speaking, DLTs, as a way of immutable data storage. This is achieved through using our partner network, e.g. Hedera, Hashgraph, MasterCard, or Suku, that can optionally be enabled for individual use cases. The other partner mentioned is Suku, who were vocal in their support for the launch of @ATMA.io on their Twitter comment. Congratulations to the ATMA team from the Suku family, and we look forward to a strong partnership and building the future of sustainability, which may suggest they've had some awareness and plans to work together. Could the same be said for MasterCard? Because they did name drop them, it could also be read as MasterCard have a solution which @ATMA.io can hook into. What does everyone think? Very cool. Not the biggest fan of MasterCard, bring eyes to Hedera, and that's what we're all about. And I tend to agree. The amount of exposure that Hedera is seeing at the moment is absolutely fantastic and is seriously gearing up for that hot summer of DeFi that I was talking about in the previous video. We can see as well the mainnet transactions are beginning to scale up. We had a sustained period of about 70 TPS yesterday, some spikes up towards 200. We're back down in the single digits again at the moment. A lot of the transactions have fallen off at the moment, as majority of them were coming from ad stacks, and the sort of underlying theory at the moment is that ad stacks basically found a way to bundle transactions to save even more costs, even though they were minuscule anyway. To save even more costs, they are bundling transactions together, which has obviously lowered the transactions per second. But again, it just shows the scalability of Hedera, and hopefully it won't be too long before we see triple or even quadruple digit transactions per second on the Hedera mainnet. Wanted to cover this as well. So over on Blocknomy, I think it's something I featured on the channel a couple of times in the past. They are a crypto research and ranking platform, and they also have their own crypto portfolios where obviously they weight different projects to provide the biggest return they possibly can. Now, of course, what's probably interesting here is that immediately you can see that Chainlink is ranked 3 on their index for ranking in terms of hot cryptos. And at rank 4, we've got Hedera Hashgraph as well. So if we view the score, we can look at how they break down this. They're looking at several different measures. You can click on their methodology tab to view more. However, if we look at this, we look at the marketing and PR, they rank them as outstanding. Partnerships are outstanding as well. The uniqueness of the chain is completely outstanding. Product progress at 90%. The team, which I'm guessing is based on size, if we click here, core team strength and the basis of past accomplishments, number of years of service, etc. So this is the accolades of the team, 90%. Token fundamentals at 70%. GitHub activity at 95%. They give a Blocknomy score of 88% overall. And obviously this ties back in as well to how they upweighted. They added an overweight position to Hedera in their portfolio, which has performed very well over the last couple of years. And they've got a buy signal against Hedera. Excellent time to buy. The signal was obtained by analyzing the sentiment of the overall market and the asset. So they are putting a buy rating, a fairly strong one, on Hedera itself. So brilliant stuff to see across the board. And it's the same for Chainlink, which is obviously another one that I've spoken about a lot in this video. They've got a very sort of strong score against them, but not as high of a buy rating. So the signal obtained here is a risky time to buy apparently for Chainlink. Regardless, I'm still buying into that. Obviously take this with a pinch of salt. However, Hedera is a strong buy. Great stuff to see. Wanted to round this video off again with another thread from Tasha Labs. This is incredibly long, so I'm going to try and speed through and skim read a lot of this. Otherwise, the video is going to be incredibly long. However, again, she's written another article which lends itself very well to what Hedera is achieving and looking to accomplish within cryptocurrency. And there's a lot of comparisons to be drawn from this. So she's talking about tokenomics and 5 things to look for in particular. So if we scroll down, one of the main points I wanted to start at is the sustainable spending utility from uncorrelated demand. So one of the weakest points of any crypto token today is to have strong spending demand, not correlated with any speculative motives. Many Web3 projects attempt to solve spending demand problems either with high yields on staking to temporarily absorb excess supply, or relying on endless new inflow of speculative users to pump demand. Well, Hedera has obviously flipped this on its head completely. They're looking for that retail adoption, and the demand for the tokens is going to come in the form of processing transactions as having utility and use cases directly built on top of the DLT infrastructure themselves. So it's a unique spin on how to tackle some of these points that many other chains completely have lackluster approaches to, because they were set up to take advantage of a DeFi fad. These approaches are highly reflexive, feeding on existing price trends. In bull markets, they accentuate upward momentum in price. Again, think of Ethereum and Solana, Avalanche, for example, these other layer 1 solutions in the bull market we've just seen. In a bear market, they exacerbate downward volatility and leave behind a trail of cynical investors wary of Ponzi-nomics. That's why, in my opinion, Web 2.5 projects combining Web 2 projects of real life use cases with tokenization and business models have the biggest potential to solve this challenge, while crypto adoption is low, as they introduce possibility to have token demand uncorrelated with the state of the crypto market. Again, this is Hedera in a nutshell, uncorrelated with the state of the crypto market. The founders of Hedera do not care about the price of the Hbar token themselves. They are more interested in building that scalability and adoption of the Hedera chain, and that is what is really going to propel the project forward over the long term. They are a behemoth utilitarian project that is at the moment underutilized, but the Hbar Foundation and Hedera themselves are working incredibly hard to onboard more and more partners and projects developing and building on Hedera, as well as fleshing out those core tools to enable that seamless, low friction entry to the space. And this is what we're going to see happen over the next coming months, years, decades, whatever it may be. Don't forget, Hedera has a 100-year vision, and a lot of us are really early to this, and we're starting to see the fruits of our sort of patience pay off as this begins to scale. I will leave this link down in the description. Like I said, I wanted to just touch on a couple of points from that. There are several more comparisons that can be drawn with Hedera and why Hedera ticks so many of these different boxes that people haven't even just seen yet, because they are too interested in buying a token that's going to do 1000x in a month and then plummet to zero, e.g. Luna. Anyway, hopefully you guys enjoyed this video. If you did, leave a like, drop a comment if you've got something to say. I do try and get around to as many of them as I possibly can. And until the next one, I'll catch you then. Cheers.